Good morning, Wall Street winners. It is Monday, May the 6th, and we are looking at some green on the screen in the futures market, pre-market this morning. If we take a look in the Bloomberg app at the futures, you can see the Dow Jones Industrial Average is up about 0.5% or 162 points. The same is true, about 0.4% for the S&P 500, 21 points, and the NASDAQ up 0.33% at 61 points. So things are looking good. We had a solid finish. We've had 2 weeks of gains in the markets in the last couple of weeks. We're kind of coming out of the peak of the majority of earnings, even though we still have some very big names left. But what we're seeing is probably kind of a quiet and wait and see period. We're entering a period now where we're going to start seeing some of the Chinese companies that have ADRs, which are American depository receipts, which is kind of a share equivalent for a Chinese company or non-North American registered company to be listed on a U.S. exchange. So you can buy them and they're effectively an equivalent or a hedge of the original stock sold in the Chinese market. So those are going to start to report earnings. And what we're really waiting to see out of some of these Chinese stocks is we're waiting to see whether the Chinese stocks and Chinese goods are selling better than expected, whether the sales of Chinese goods have improved over the last quarter and over the last year. And then we're going to compare that to the sale of American goods to see whether tariffs and other things going on within China to really try to stop the sale of American goods or do things to affect the sale in a negative way. Looking again at Apple. So there's been a number of restrictions around Apple iPhones. You can't buy them if you're, or you can buy them maybe, but you can't use them in Chinese government office. There are other restrictions with the iPhone in China. There's app store restrictions and app restrictions. So these things all make consumers in China wonder whether they should buy a Chinese phone, maybe a Huawei phone, versus an Apple iPhone. And so these numbers will be very interesting, and we'll see how the Chinese stocks do. I have a feeling that, and I have had this feeling for a while, and I've been wrong in the past, but I do feel that the Chinese economy is due for a rebound, and a rebound being an uptick in sales and consumer spending this quarter and going into the rest of 2024. But we'll have to wait and see whether that materializes. We're also seeing some news of attacks in Rafah over in Gaza and Israel. So that it appears to be potentially affecting crude positively and should push oil stocks higher today. So you've got a little bit of a jump up in some of the retail stocks that we follow here. So most in the green. We have Home Depot reporting in 8 days. So we'll see that next week, so that'll be an interesting one. We've seen our healthcare stocks report. I still believe that, especially at pre-market here, JB Hunt, I think, is a great buy for 3 to 6 months if you were willing to hold something at 162, which it looks like it's going to drop down to today if those pre-market numbers stick. I think you've got a lot of goodness to come out of JB Hunt at if you get in the 162 range, and you're willing to hold that really through to the end of the year at this point, and you could sell it towards that point. You should see, I think, a pretty significant positive capital gain, and you do get a 1% dividend on that, so there is a little bit of upside as you hold that. If we go down to the oil stocks, for the most part, are in the green, and I think a lot of that is due to crude being up, still down below $80. So this thing crude definitely needs to get back into the mid 80s for these things to pop back up around where they were when they started to report earnings. All of them off of their highs. And the one that is really interesting to me, which isn't the oil stock, it's the utility, is Con Ed. So Con Ed is looking like it could get above $96 today, and yet they did not have phenomenal revenue and earnings reports. In fact, it was down, revenue was down year over year. So the earnings beat, but the revenue was down. So, I mean, obviously they're running a solid business if they're able to make more earnings on less revenue, but it could have to do with share buybacks as well. And that's what we're seeing in a lot of companies and making announcements around earnings buybacks so that they can push their earnings higher as we move forward into future quarters. But Valero looks like it's set to make a bit of a pop today. SLB looking like it's going to make a bit of a pop, and Halliburton as well, thanks to the lift in crude. I've added a new stock to my tech portfolio because it reports today. And I've been following this one loosely. It hasn't been making money. It's not profitable at this point, so it's not really high on my list. But I am starting to follow Palantir, and I am interested in what they report today. They are up pre-market, and they've had a pretty good little run since the, call it the 19th, I think, of April. If we look at the chart here on the 1 month, you could see April 19th down at around $20 and change, and now up to 23. So not a bad little run there, greater than 10% gain on that over the last 10 days or so. So flipping back, CRM looks like it's going to continue to climb. Now, CRM has not announced yet, so they are coming out at the end of this month, beginning of June. That's one of the big names that we're going to be looking for. Apple obviously did announce last week, and then we scroll down Palo Alto, 14 days out. So this will be another one to keep our eye on. I do believe this stock is going to get back up into the 300s pre-earnings and then 310, 320 post-earnings. Net dropped, as we saw. So again, that could be kind of forewarning for Palo Alto, but I think they're very different in terms of company structure and size. Microsoft looks like it's taken a bit of a bump up. I do like, for a quick gain, I do really like ARM. I think you've got, there's so much volatility in this stock. There's a lot of potential there. The other one I still really like for volatility and a bit of a jump is NVDA. Obviously, NVDA has not announced results. They are going to be announcing results on the 22nd of May, so coming up in a couple of weeks. And Alibaba as well. So Alibaba is 8 days out to earnings, and it has been steadily climbing. It was down in the low $70 range at the end of March, and it is now up at 81, looking like it could get up to 82 today. It's steadily climbing into earnings, which tells me that analysts do think that there is going to be a positive announcement coming out of the out of earnings. And then finally, Adobe. Adobe's been making a climb back as well, slowly. It's getting close to getting back to 500. Its earnings come out in the second week of June, so we still have a ways to wait for them. But it'll be interesting to see how this story about AI, which really hurt Adobe in that AI was going to be able to auto-generate movies and create earnings for folks and take business away from Adobe. It'll be interesting to see how they address that and what their AI-related story is around that. So that's where we are today. You've got your financials as well, moving higher. I think we're in for a week where it looks like it's going to start off positive in the morning today. I wouldn't be surprised if we end in the negative and have a few days in the negative today as we see things kind of pull back. We're going to have some Federal Reserve Chairman speakers talk this week, and anytime those folks talk about the potential for delayed rate hikes or no rate hikes or whatever it is around the economy, doom and gloom for the most part, is likely going to have some type of temporary negative effect on the markets. So be careful. It is I feel it's a risk on week. I would be very aggressive in getting in and getting out on the same day this week and taking your gains. Good luck. If you like